Welcome to my CPA review. I am your instructor Varun.m2p and today we start with the auditing portion of the CPA exam. Audit is a very powerful tool, and as we know, with great power comes great responsibility. So all you future CPAs out here, remember that audit will very soon be a word that identifies you. You're all set to become powerful and responsible. To understand audit in a nutshell, we'll use the famous questioning techniques known as the 5 W's and the 1 H. We start with what is an audit? An audit is an examination of financial statements. Why is an audit done? To express an objective opinion as to the fairness of the financial statements in accordance with US GAAP. When is the audit done? After the client or the management prepares the financial statements. Who does the audit? We, the independent, the expert auditors. Guys, note the division of responsibilities here. The management is responsible for the financial statements. We as auditors are responsible for our opinion on those financial statements. We are not directly responsible for the financials. Where are the audit findings reported? On the audit report. Now, the audit report may represent an unqualified opinion if everything is fine. If we find something fishy, something is not right, we report a qualified opinion. If nothing is right, we give an adverse opinion. Or if we are unable to express an opinion, we give a disclaimer. Next, we move on to the 1H in our questioning technique. How is the audit done? By performing audit procedures in accordance with generally accepted auditing standards, the GAS of audit. Guys, we have 10 GAS, and that's the base on which our entire auditing spectrum is based. Now, I'm going to give you a magical mantra which will ensure that you remember the GAS for life. Guys, I give you a general tip. To go to the client side and take a field pick. So you auditors, you've taken a general tip from your instructor. You've gone to the client side, you've gone to the field, you've taken a pick there. Then you come back and report all clean and dirty elements. Guys, you are auditors. You report everything that you find in the field. All the clean elements, especially the dirty ones. So, your 3 general standards are the TIP of the tip. You have 3 fieldwork standards, which is the PIC of your field pick, and then 4 reporting standards, A, C, D, and E. So guys, we have the 10 GAS here, the 3 general standards, 3 fieldwork standards, and remember, 4 reporting standards. Now, the T of TIP stands for training and proficiency. As auditors, you're supposed to have enough of accounting education. You need to have adequate practical experience of auditing and certainly the industry knowledge in which you're doing the audit. The I of general stands for the independence. This is very, very important. Independence is about being neutral. It is to act with integrity, objectivity, and ensure credibility. You need to be independent both in fact and appearance. I'll give you a small example here. Let's say the auditor owns 10,000 stocks of 100,000 stocks of a company outstanding. He's got a material stake in the company he is auditing. So his independence is impaired in fact. That's the real state of mind. He would want the company to do well so that the value of his shares go up. But assume that the auditor owns just 10 shares of 100,000 shares outstanding. That is an immaterial stake. But what the public is going to say? The auditor is also a shareholder in the company. So his independence gets impaired in appearance. That's how it appears to the public. We're going to discuss independence in depth in the ethics and professional responsibility section. Next, we move on to the P of TIP. That's professional care. I would call it due professional care. It is to act with due diligence and ensure that there is no negligence. We must exercise due professional care in planning the audit, performing the audit, and in preparation of our audit report. We must observe the standards of fieldwork, the 3 fieldwork standards, and the 4 reporting standards. We must have an attitude of professional skepticism. That's a questioning mind with critical assessment. That is, we neither assume that the management is dishonest, nor do we assume total honesty. For example, the management says the useful life of this asset is 5 years. We do not say, yes sir, the life is 5 years. No, we say that we need sufficient and appropriate audit evidence to justify that number. As part of a professional care, we need to obtain reasonable assurance. Guys, this is a very interesting concept. Let's say the assets of a company are up to $1 million. So we draw a level of materiality, let's say at $5,000. So from $5,000 to a $1 million, that's the scope of our audit, for which we give a reasonable assurance. What would be absolute assurance? Absolute would be when we are giving from $0 to a $1 million. That's simply not possible. It might take ages to audit of just one company. Next, we move on to the fieldwork standards, the PIC, where P stands for planning and supervision. We must adequately plan the work. We must design an appropriate audit program. Supervision is when we must properly supervise any assistants. The work of staff auditors must be reviewed by a qualified auditor. We simply can't say the assistant did the job and it's fine. The I of PIC stands for the internal controls. We must obtain sufficient understanding of the entity and its environment, including its internal control, in order to plan the audit, assess the risk of material misstatement of the financial statements, whether due to error or fraud, and then determine the net of our audit procedures. Guys, that's the nature, the extent and the timing of audit procedures. For example, a company with strong internal controls would require lesser of substantive testing and lesser evidence to justify our opinion. But with a company with weak internal controls, we would need more of substantive testing and more of evidence. Let's just step back and take the example of a publicly listed company which has got strong internal controls under the charge of a responsible internal audit department. So the external auditor would need to do lesser substantive testing and would be happy with lesser evidence. But if you go for a boutique firm which has weaker internal controls, we the auditors would need lots of substantive testing and certainly enough evidence to justify our opinion. The C of our fieldwork standards stand for corroborative audit evidence. This was the evidence we were talking about here. As auditors, our major focus is evidence. We do all the hard work, all our audit procedures, substantive testing is for evidence. We can provide an opinion on the financials only if evidence is sufficient and appropriate. The standards do not require any specific audit evidence. It is based on our judgment. Remember what we said. Stronger internal controls mean lesser evidence may be fine, but if the internal controls are weak, we look for more and more. Next, we move on to our reporting standards. The A of reporting standards stand for accounting is equal to US GAAP. Our report must state whether the financial statements are presented in conformity with GAAP. That's an explicit statement on our audit report. The C of clean stands for consistency with prior periods. This means that there are no new principles applied. There is a consistent application of GAAP from year to year. This is implicit in our audit report. Which means if everything is fine, we say nothing on our report. But if we smell something fishy, we report it. Our report must identify circumstances in which accounting principles have not been consistently observed from year to year. The D of dirty stands for disclosures. This is again an implicit standard where we need to check if the management has made proper disclosures in the financial statements. The last element, the E of our reporting standards, stand for expression of an opinion. Guys, this is the why of an audit. This is what we are responsible for. We are paid all the big bucks to express an opinion on the fairness of financial statements. If we cannot express an opinion, we simply need to give a disclaimer stating reasons for the same. For example, our audit work was not nice, we were not independent. But in all cases where our name is associated with the financials, our report should contain a clear-cut indication of the character of our work and the degree of our responsibility. In other words, the scope of our audit. So guys, we now have all the 10 gas on the board. The auditing portion of the CPA exam is based upon these 10 gas. For example, in audit 1, we will study about the general standards, the training and proficiency, independence, professional care. In audit 2, we would study about the 2 fieldwork standards of planning and supervision and internal controls. We would take up the 3rd fieldwork standards of audit evidence. That's very, very important in audit 3. And audit 4 is going to contain all our reporting standards. It is going to tell us what our report should be, what opinion our report must give. As I said in the where of audit, an unqualified opinion is everything is fine. Qualified means there's something fishy. An adverse opinion, nothing's right. Or a disclaimer, we cannot express an opinion. So friends, as you see, there's a lot more to come in audit, and I'll see you in audit 1.